Good turnaround Tuesday, Warriors. How's everyone doing today? Hello, Bran, Blake, Ingmar, James, Christian. I have a beautiful, no one wants to hear. AJ, Glenn. Hi, Ryan. Okay. I want to talk a little bit about the trader funding program. How many of you guys have, over the course of your life, I know I've done it where I've taken weekend intensive courses to pass for a license, say my Series 3, Series 7. Some people do it for real estate and insurance. I came in. Any of you guys ever do that? Take one of those intensive courses? Okay, Bran. Yeah, okay. So some of you had. So really, that's what you have going for you when you sign up for the TFP here at ForexAnalytix with Blake. Then backed up by the community of many that have passed the assessment, just like Blake did it, because he wanted to know what everyone, what kind of hoops they had to jump through, and help. It always helped to have tips from the instructors of those courses. I mean, anytime I took one of those weekends, I passed the exam because they teach you how to pass the exam. Okay, and Blake, you can't guarantee it, but Blake is going to give you some tips to aid you and the community to support you during the process. So, if you need more trading capital, it's a great option, and you don't just sign up and with a prop firm that just lets you go out there on your own, hopes you lose, so you take another 20 assessments. Okay, so consider it. Who's done it here in the room? Anyone?
Dale, and while you're
Laura.
asking that,
Laura has. Laura's doing it, right?
Dale, just I was gonna say, and I'm not gonna mention his name, but I had a meeting with one of our traders. He works for a clearing firm, and he's been with the assessments for a long time. He sees the value in them. And he's been in the business for 15 years, and
Yeah.
it's a great opportunity for people to because we operate so much differently than other firms that they make you pay every month. They may not give you unlimited time to, or they might give you
Yeah.
unlimited time to pass, but they'll charge you every month.
Yeah.
We don't. We just you have a one-time fee, and you can take as much time as you want to pass, and you can take your time, and that's it. I mean, and it's real simple rules. It's not you don't have to jump through a bunch of hoops, and
Yeah.
that's the difference. And plus, you get in with the
You,
Forex Analytics community.
yeah, I
So
think that's the big difference. Okay, because the big difference is, once you're in there, being able to filter out good ideas from the community and, guys like came in and Ryan and you. So you really end up with coaching all the way through it because, you have access to the site. So I don't know anyone else that does anything like that. So I just wanted to remind people because, we're coming into the third quarter. If you went through some chop this summer, and you think that you could do better because you're trading with shortstop money and you want to go to the majors, uh, there's a pathway. I'm not saying it's the only one. It's a pretty good one. So that's the end of my pitch, and let's start throwing some strikes in the market. Um, Let's start off with Ryan. So Ryan, we had this divergence here. Went right to the line. Just want to say to people that return lines on wedges, they're not made of cement because every once in a while they can just jump over the fence, right? So this is a fence. So they're what I call throwovers. But so far so good. Pretty clean divergence, three tops. Do you think that was it yesterday, Ryan, or there's another run to the upside towards 51?
Yeah, I don't think you can rule out the trend at the moment.
Okay.
Dips are pretty shallow in dollar yen terms. 150 was always going to be a big level. It's done its usual thing when we hit a big level on the first test. It's rejected it, managed to get all the way back under 148. Sorry,
Yeah.
149. And yeah, we'll see what happens now. I'm keeping half an eye on US yields now they're back, because they're looking like they might be topping out. And if that happens, then that's going to make dollar yen a bit tougher to get back up and break those highs, and in general to gain.
It's
So
even a weaker structure, RSI structure in the 10-year. Look at this. Okay, this path down, the divergence here, and there was divergence in the yen, but it had a much stronger pattern. I mean, compared to the 10-year. So structurally, the better short when it comes is going to be this.
Yields, yeah,
Yeah,
bonds,
because they can't even get back over 70 on this high, can't get back over 70 on this high, and I'd assume if they made one more high, they probably wouldn't take out 70. So, I still think there's a chance that here's TLT is fighting to hold. In fact, it did. I remember the line we talked about last week, Ryan, and he said you always have to play those lines. So it hasn't been able to close under it. Okay, I mean it's traded under it, and now it's called a little higher. So I think that's important that it could trade under it. Here it did. Here it bounced. Here it held. Here they tried to take out the breakout, but they're back above it. So I'm seeing a little bit of a bid come into the long end. These are 20 years, the TLT. So yeah, I haven't given up on the fact that the bond market rally, that it's of course just a bear market rally, but I haven't given up that it's complete, because if you look at the huge move we've had, and I have fibs here, we haven't even retraced 38% yet. Here,
Well,
look,
you got two big moving averages there as well, haven't you? Daily and the
yeah,
weekly.
yeah. How
So
about a right shoulder? How about a right shoulder here on the monthly? It's an ugly month,
yeah.
but
Well,
we
it all
go
stacks. Your
80 to
evidence for
100,
going long.
gives you 110.
Yeah. Your
If we
evidence
get
for
through that.
going long down there is just building and building and building. You got two trades there. You take it against that blue line with a stop under your moving average, or you trade both. You do half your trade at the blue, half your trade at the moving average, and still have a stop below it.
Yeah.
And you're not risking a lot. You're controlled, but you're trading a big level, big level, and that's how you do it. But I think yields at the moment, the higher they go, the more it's going against what the Fed is doing, particularly in the short end. So you've always got to keep that in mind. 10 years, obviously, it's a longer duration. Anything can happen in 10 years, but when you're looking at the similar picture in the 2-year yields, above 4% for 10, 4.20, you're getting into the current levels of Fed rates when they're going to be cutting still.
You have a pretty tight stop. I mean, I think this, like we were talking about, if you buy the notes, or you're looking for yields to drop with the yen, and your stop would be, if I saw a 420 close, if you look left, how important that was. And what proved it was important is the measured move was actually achieved at 370. That was a count. All right. You had a 50 basis point formation. It broke down. You got your objective, 50 points from the breakdown. So that gives this formation validity, So we shouldn't close back above 420, or something else is going on. We're going back to new highs. All right. So, we're at a crossroads on a lot of stuff, aren't we? Do you feel that way?
Yeah, no, absolutely. It's these pendulum swings that we're getting over what the Fed's doing. It's affecting all this, and it's not to say that if yields stop going up, it means dollar yen's definitely going to stop going up. Not at all. That thing's a bonkers world all on its own. I just think it makes it harder to see big gains in dollar yen if it's not getting the added influence of yields.
All right. Well, I'm making a controversial call, and I've gotten some hate tweets or You're crazy, Dale.
From Stelios, you short in silver?
Stelios, I think he did it under a pen name. Okay, I don't think
Stelios.
anyway. I wish Greg was here because he's the expert in Elliott, and I'm just dangerous in Elliott. But there are these things where you have the first break of a wave that's just beginning, and you make a new high that's called like an irregular B. Like this could have been an irregular B. And then if you take 1.618 of this move here, it takes you down to the 200-week moving average. I have to think there's going to be some risk off there. I also think that we're probably on the right track with the dollar if we ever have a chance to sell rallies. I think cable does. And, gold could go up when the dollar's strong, right? Guys, we've all seen that. But, it's my belief that silver really needs a bear market in the dollar. So, if we're going 105, 106, it's not a friendly environment for the silver. And the gold silver ratio, I think, is trying to back it up with, I think, a continuation formation that tells me we're going to trade over 90. I mean, this looks pretty much like a flag, pretty classic flag. And we take out 90. That's not the best environment for silver either. Is CSI in silver like 80 or 70 or up there? I mean, because people didn't like me talking about lower silver. Anyone know?
Let me pull it up. It's in the chat room.
Okay. See, we have everything there.
Let me just get to it really fast. Silver is at
68.
What's that?
68.
There you
That's
go.
nothing. Oh, K-Man's here. K-Man, you have any comment?
Hello.
Hey, buddy. You trading this stuff, the white stuff at all?
Well, I still have my long-term longs, but I have not added the silver in silver yet. I thought there was a bit more to come, and I'm actually not overly surprised, but it's holding relatively well despite the rest of the commodities coming down and
Sure.
energy lower and stuff. And but I thought we would have a chance to get back into those low 30s, high 29s. But for the time being, must be said that as well gold as silver are holding up pretty well. There's been a few of the lesser central banks saying that they are still planning to accumulate more gold. But yeah, well,
Yeah.
I must say, I thought on those lines about Israel not going on an all-out destruction of Iran. I thought gold may have opened a bit lower today, but it's holding up pretty well. Seems like some central banks are still involved in that too. So
well, the gold silver ratio says if you want to be long precious metals, gold is the one.
yeah,
that right. And I'm not saying I'm going to be right, but I'll feel a lot more right if I get a close under 30. That's what'll trigger, that wave. Right now, it's just a guess, but I need closes under 30. I don't think would look so good since we tested it a few times here and held and bounced. And then we have 50-day moving averages coming in at the same level. So that's a big test if we test it again, $30.
Well, it was kind of my opinion that if the market does not buy the Chinese revival right now, that silver may come down a bit on the back of it too. But no, both are holding relatively well right now. So I mean, more in a wait and see. But plan is if we get serious setbacks on silver and both gold to get back into small bigger positions. Perhaps we need to just start to prepare for 2025 already. But we have big stuff going on before, so there will be before the year is over.
I tell you, too much big stuff. I just wanted to point this out. See the NASDAQ here? It finally took this high out. and I'm not saying it's a bearish call, although I do expect a shake in October, not a big one, maybe 5%. But look at this. This is the NASDAQ. Never took out the July high compared to what the S&Ps did. Here's the July high, and look at the S&Ps here. So the leadership that we had in July is definitely not the leadership that we have going on right now. That's a change. And, you know, everyone keeps pulling up this weekly chart that shows, you know, that we could be forming the third drive here, and we're diverging dramatically. First of all, you don't know you have the end of a move until you have a reversal. So you would need a reversal week to call it a third drive. But anyway, it does have the form. I don't think it's done. I think we'll go to 6,100, which, you know, was so silly that we, you know, I just didn't buy the breakout like Ryan did. And, you know, it's not an accident that this formation measures to 6,100. You know, it's 1,300 points, 6,100. Anyway, I thought it wouldn't get there. But, you know, you go with what you see instead of what you think. Anyway, just something, you know, I think we're no more than, I don't know, see what happens after the election. And you know who else said that to me? Blake, what's the name of the guy who trades hedge funds, and he was going to come in and do something? We've interviewed him a few times. Dale Briscoe.
Oh yeah.
So Dale, when I was setting up the next interview, you know, and he was saying during his interview, don't get in front of this market. He was bullish gold stocks, but don't short it. When I set up the interview, he said things will get interesting in the market after the election. So
yeah, you know, and I know you've been leaning into that idea, Dale, and I'm a big positioning, buy the rumor, sell the news type of person.
Yeah.
Positioning is probably one of the most important things to me as a trader, because you can have a bullish or a bearish backdrop, whatever you want, but it's really more of like you get everybody on one side of the market. And I 100% agree with you. Everybody expects, well, I do actually think that Trump's going to win.
So does DJT.
Everybody
DJT's
everybody.
Been up.
Yeah, I mean, it's been going down for the last couple of months, but you know, maybe it's bounced. I haven't watched it in the last
turning
week or
with
so.
The polls.
But
it's like
regardless of that, I still think he's going to win. And when he wins, everybody's going to be piling into long equities. And I think that is the time to sell. I don't know if it's that day, it's that night, it's 2 days later. But I'll be looking for signs of a reversal. I'm not ballsy enough to just, you know, if there's an announcement on election night that he wins, that he's won the general election, I don't think I'll be ballsy enough just to stick my neck out and start shorting equities. But I'll be looking for a reversal, you know, in the days ahead, if not that day. You know what I mean? I'll be looking for the signs. But I really believe, and I know you've been talking about it, and I'm with you 100%.
I just wanted to show. So, you know, I know you remember when Trump was elected in 2016.
I lost 80 grand that night.
Yeah, that's a
because I didn't believe it. I was like, no, this is not
down.
Right.
It was limit down, and what's his name? His buddy went back to the office, Icon, and started buying up futures. So someone I follow says, you know, wouldn't it be classic? This is where it was. So you've had 250% gains from his election win in 2016. Wouldn't it be classic if this whole move ends with him winning, just like,
you know, it'd be ironic.
Yeah.
Be ironic.
Anyway,
but you know, like I said, I lost a lot of money that night. I recently joined my prop firm that I was at, and I spent a good hour talking on the phone with you know, the principals over there, and then I had to claw my ass out of that hole. The next couple of days. So fun stuff. But I'll tell you, you know, we've already been through it. Hey, let's talk about a few things really quick. And I know we're talking some headlines. about, Israel. And it happened late in the day when Israel announced, and you can actually see it here. Let's take a look at crude. They announced that they wouldn't attack any oil facilities and, just military targets, Iranian military targets. And you can see crude oil actually sold off like this. I was in the middle of doing analysis last night, and I had my head down, in the charts, not looking at anything. And then I see the headlines and I'm like, holy crap, like what the hell happened there? And Simon in the chat room, he's like, oh yeah. And he's posting it and he's like, oh, you might've missed this. And I was like, damn, I wasn't even looking. But Ryan, you did some analysis, when in European trade, and you were talking about that the dollar CAD might find some, or excuse me, crude might find some support at 70. That was bang on, buddy. Good analysis there. We bounced off of 70. You said we have support there. So how do you feel about crude now? I mean, do you sell this bounce that you're seeing?
No, I want a bit of a bigger bounce. We're not out the woods. Israel has yet to confirm exactly what they're going to do, but all indications is that they're going to retaliate, but not hit anything other than military targets. So they're going to leave off oil and nuclear. If that's the case, then, and if Iran, the rumours from Iran that they're going to say, okay, Israel, keep your attack limited and we'll call it quits. If that proves to be the case, then that will end this part of the hostilities, I think. And then crude might go back to trading the fundamentals, and we know they're pretty weak at the moment. So sell a rip. Yeah, I think if you get another test up towards 72, 73s, that's not news headline driven, that might be worth a trade. But otherwise, yeah, you've got to be looking at that $66 area, because as I said on that analysis, we've been down here plenty of times, but we've not had a daily close since August 2021, I think, or June 2021, something. And even then, we only closed on the daily basis, or had 3 days below that 66 level before we came back up. So it's a bit of a big level down there.
Yeah. Okay. All right. So,
well, Ryan, if people buy that narrative you just gave, they like fairy tales. All right. That they're telling them what they're going to do, and that'll be okay, and then they'll just stop. That's a fairy tale. There's blood, but blood has been spilled.
Oh yeah,
both sides.
There's different parts. There's Israel and Iran, the direct escalation conflict, but that's not going to, if that dies down, that's not going to stop what Israel doing with all the rest of it. So,
and Israel may not bomb the energy infrastructure, but Iran could play games in the Straits. Yeah. Okay, Israel could control what they do, but what's their weapon? I mean, that's why we have ships there, to try and keep the Straits of Hormuz open if anything happens. So I think it's more about what Iran does after the retaliation. I don't know if they're just going to sit back and go, okay, we deserved it, and we'll take it, and let's play nice.
Hence why you can't just shut your eyes and sell oil.
No.
You've got to have these possible headlines still in the back of your mind, and plan it into your risk when you're trading it.
Yeah, it's the strangest war when enemies disclose their targets to their enemy. Don't you think, Ray? I mean, don't you think, Blake? For a military tactic, have you ever heard of anything like that?
Yeah, well, it's because it's theater. That's all it is. It's all it is for right now, anyway. A couple other things. UK jobs data came in, and if you look at the data, the claimant count change came in a little worse than expected, but the unemployment rate dropped quite dramatically. So, K-Man, what did you make of the UK data overnight?
Well, I mean, it's a decent report, obviously. The thing is, there was a bit of a sideline where job openings were actually slowly going back to 2019 levels, but I think it's a very decent report. So that is what is supporting the sterling right now. That's what I was saying on the flow show as well. The sterling has been a bit hesitant for a few weeks, let's say, and then with euro sterling corrected, cable corrected a lot. And then now it seems that the first scare or the not a scare, but the worries about the upcoming budget are pushed aside a little bit, and sterling is getting its mojo back. So we could be in for, especially with the ECB around the corner, could be in for a bit of decent support for sterling in the next sessions next week or so, and then we will obviously concentrate back on the budget towards the end of the week. But yeah, we're gradually slipping back down to those prior lows in euro sterling.
You know, I think sterling's real simple technically. I mean, I'm not trading it, but I think it's technically very, very easy to look at. This is the previous triangle. You guys can see it's in the dash line. You can see that high to this high to the flag low comes in at 130. I mean, while you're above 130, it's really tough to be short. Now, you know, we got this budget and everything else. If you want to, I think the way to play it, especially those of you that are, you know, sterling bears, yeah, you wait for a little bit of a bounce and then you sell into it, some strength somewhere up here, I don't know where, and then you add to your shorts, you know, on an actual breakdown below 130. I think it's an easy trade if you want to be a bear, how to look at it. And then the flip side is if you want to be a bull and you're just like, okay, well, I'm just going to play it to the long side. Whoops. Then, you know, while it's above 130, you just, you know, continue to be long. And if we break above like 130, 160, then you've got, you know, probably move back up towards the 132, 33 level. So I think it's easy. If I was trading it, I'm just not trading it, but I think it's very well defined. If you can get closer to 130, I think it's you know, it's there. Now, one last thing I wanted to mention, we have Canadian data coming up, but I do want to mention that, you know, Ryan, you were talking about yields. The one chart I want to bring to everybody's attention right now is the 10-year yield, just because we rejected the 161% extension of this move, 127% extension. This move, big confluence, is channel resistance. We hit it when the bond market was closed yesterday. Futures rolled over and we broke through channel support, which is now weighing on the yen. So, well, I think it's like Ryan, you said, it's aiding the yen a little bit lower. Now we do have Canadian jobs, Canadian inflation data. Ryan said, Blake, I think you need a correction in your title when I tweeted about the dollar CAD at 136. No, since we broke 136, it has been straight up, and no one should be on the short side through there, because that was just a squeeze. Now that we're at the 161% extension, 78% retracement, now it's all, you know, it's going to be more data related, maybe oil related, as you guys mentioned. But this is something that we need to be looking at now, because we do have 10 seconds here. Let's just move that over. And let's take a look at this Canadian data as it comes out. Here we go. CPI. Oh boy, that was weak. You can see weak data, and we're almost at the 78% retracement.
Wow.
And look at that go. Woo. So what do you guys say about that CAD?
Sell it.
That's the pendulum swinging to the 50s even more now.
Yep.
Pin bar.
Although some of the core measures came in, like the trim and the medium and all the other 30,000 ones they use, came in give or take unchanged. So the core measures are looking a bit more stickier than the headline CPI.
Hold on 1 second. I'm sorry.
Coming off pretty good.
What's that?
BOC called up as well.
Yeah, I mean, we ripped right up to the 78% retracement, just continued to squeeze higher. Days like today, and I want to say something about the Canadian, because this happened on Friday. And if you guys were listening to me on Friday, listening to me when I said this, the Canadian is really notorious for when you get data. Like a perfect example was Friday, right? So let's go back to Friday. You get this data and it's like, oh, that's a strong Canadian jobs report. So, and I'll just go back to Friday, right? So you get the strong Canadian jobs report. So you're like, okay, this is it. It's going to roll over. And it tries to, and then reverses by the end of the day, and it does the unthinkable. We talked about it in the ForexAnalytix chat room. no one should have been short the dollar CAD on Friday because we're just like, it's going to do the unthinkable. It's going to go up when everybody thinks it's going down. And this is exactly what's happening today. Dollar CAD, the Canadian's weakening, this data. And I wouldn't be surprised if the dollar CAD actually reverses by the end of the day and we trade back below 138. I'm just saying that because, like I said, the loonie, they call it the loonie for a reason. It is very notorious for just doing what I call the unthinkable, just going the opposite direction of whatever direction you thought it was going to go following news. It tends to unwind that by the end of the day. And you just sit around and go, what the hell, and so it's just something to be paying attention to as we go into today. Dale, I know you have an interview. I want to say Ryan came in. Thank you guys for the flow show. I listened to you guys this morning. I got up a little early this morning because, Dale, you can sympathize with this. I try to go to bed early. And of course, what happens? I get up early. I go to bed 30 minutes early. I get up 30 minutes early. And then it's like ahead of my alarm clock. It sucks.
Okay.
So all I want to do is try to sleep.
I do
that. It sucks.
Well,
anyway,
you have the time change coming where you have.
Yes, I do. Yes.
I thought I'd remind you.
No, I know.
Because I've been suffering while you've got that extra hour, buddy.
I'm very well aware it's coming. So anyway,
I may have to move to Chicago so I could sleep in.
There you go.
I wouldn't have to get up till 6.
Well,
I don't really have much of an ass anymore. So anyway, I sure had a good time.
You got the old man flat ass. Yeah, flat ass.
Well, yeah, right. Part of it was surgically removed. Anyway, Dana, I'm sorry. Too much information. We have a great guy who covers, Dana covers he trades and invests in so many different sectors that I could ask Dana anything. So Dana, welcome back to F.A.C.E. You know what I'm going to start with, right?
I never know what you're going to start with, Dale.
All right.
It could be anything.
All right. All right.
How you doing, buddy?
Ready. All right. Thanks, Mike.
Welcome,
anyway,
Dana. Welcome.
Thank you, guys.
So, Dana,
how you doing, buddy?
You were long Japan near the top of the yen. I want to know how you handled Japan and what you're doing with it now.
No, I still like Japan a lot in the long term. That's more of a long term. So, I mean,
You just rode all that vol, huh?
No, we sold it. So we've been long Japan for a number of years now. How do I get rid of this thing? Okay. We came into we've been testing the top, that 1989, 90 top. So I would expect to consolidate here for a couple of years, maybe.
Yeah.
But we're still, we still got, I think, a lot of life left in this secular bull market. You got to remember how long the bear market was.
From 89
suffered for, several decades. So you can expect several decades of a bull run. But after this run, it's not unusual for us to move sideways for several years. We had a really good run, but especially had a great run in the hedged equity portion of that, or version of that. So DXJ was just a monster for us for several years. In that July sell-off, it kind of traded like the large cap techs, right? Kind of led the way down. So we got rid of our DXJ into this bounce, into
nice.
that kind of ABC correction. So into that B wave. Got rid of the rest of our hedged Japan. We still have some unhedged Japan because it looks better. I know you guys are big currency guys. I am not, but one message I'm seeing currency wise is maybe we're going to continue to see some dollar weakness because the hedged equities are still lagging here. You see hedged Japan looking worse than the unhedged version. The equities.
So yen is bottomed, and this is just maybe a failing rally or a pullback.
That could be the message that we're seeing. Yeah. Especially you look at Europe, the European indices back at all-time highs. You look at the hedged Europe average, which hedges away the currency, and that's lagging significantly. So maybe the international currencies are going to be stronger here for a bit. The dollar continues weaker after this whatever bounce it's on right now. So from a currency perspective, I think that's interesting. So
I'm thinking 106 Dixie, Dana.
Are you?
and then a failure. Yeah,
Okay.
because this first wave from par to over 103 was impulsive. It wasn't like a zigzag up to resistance. So
Right.
I think I'm looking for a pullback under 102, and then
And
a
then a
push
bounce.
back, and then a push up to 106.
Wouldn't surprise me. We'd be
Yeah.
again, I'm not that's not my
Oh, but I'm
core
just saying
market, but
what I think for the dollar.
yeah, no, I agree. Benefit of doubt is still lower for the dollar, I think.
Okay. All
So
right.
we'd be sellers of rallies.
Yeah.
And
Oh,
probably asking me about bonds next. So
no, you know what I wanted to go.
where
Were you in China before the explosion?
we were
And then the give back, and so you consider it a good trading vehicle, investable.
China.
Yeah.
Oh, well, I like volatility for
Yeah.
sure.
Right.
We weren't in mainland China. That's still a little crazy. You look at, I mean, that's not an organic move. That's,
Yeah.
interventionist type of a move, which you can't be too confident. And did break, obviously, that downward momentum. So maybe you can try your attempt
Yeah.
at buying the pullback. But we've been long part of China just through conventional emerging markets like this ETF IEMG has been making higher highs, higher lows for a while. Ran up into that 61 retracement and is pulling back from that. So took some profits there, but still like some of these more conventional emerging markets ETFs, which again, higher highs, higher lows, which we like. Could pull
Yeah.
back. If we pull back to that breakout point, we'll add back some good size into that. But still like
Yeah, that
I
looks
think
like
that's
a
a
breakaway gap to me.
yeah, that and that's
Could
a
be.
I think it's a more reasonable way to play that
Yeah,
move instead of
the other one, data. I heard that the shorts were squeezed on Shanghai and in Hong Kong so hard that
yeah,
their eyeballs were popping out.
100%. 100%. So
Wow.
I like moves. I like plays like that for China and other, other emerging markets. India's been great for a while. Here's a small cap. India has been a monster for us. Lower highs right now. I don't know if it's gotten too popular, but we're still riding that. Other less on the radar markets like Indonesia. Here's the cash market. Indonesia had a great breakout pulling back here towards the test of that breakout level.
Yeah.
Looks great to us. Argentina, I know it's not in Asia, so
Right. But so you're seeing
don't
a
don't
lot of
mock me for that. That's been great. Just
yeah.
held that breakout level the other day and bouncing off that. So seen plenty of moves internationally, and a lot of that plays into
A weaker dollar.
oh yeah, a continued weakness in the dollar. So
So if
again,
we had the kind of dollar rally that I'm talking about, that would set up great buying opportunities across the board. Because after
definitely,
that bounce, I think Dixie's going to 95.
definitely, it would definitely be I think
That
allow
would
for good entry
light it up.
points. Yep.
Yeah, better than the U.S.
Yeah, I think US so our models, which are based a lot of the input comes again from the internals, breadth, advanced decline, stuff like that. It's still solid. Our stuff is still long. In fact, in the third quarter correction, never did give a sell signal because the broader
Yeah,
market stayed kind of firm. This is the value line geometric. It tracks the median stock in the market. Still going sideways, hasn't broken out. If you look at its brother, the arithmetic, this tracks the average stock. So average
yeah.
stock did break out. It's trading kind of moving along at the top of the range, near all-time highs. So still looks good, still looks firm. Our stuff is still firm.
What about the argument that compared to the July high, the number of new highs has been shrinking?
That's a little bit of a concern. You also have I would say, as far as new highs, new lows are concerned,
Yeah,
you could have a significant lag time in between the divergent high and the ultimate high. So
Years?
yes, it can be years or year.
Okay.
I'm less concerned about that. If you look at the AD line has been hitting new highs, but not
Yeah.
in this recent bump up. So maybe we
Yeah.
see um, maybe a short-term blip here. I
Yeah.
am concerned about
5% pullback.
seasonality right
Yeah.
now. We're
October.
still in October
Yeah.
pre-election. It all conspires to maybe again, our stuff is still bullish. Market action has been obviously pretty good.
Yeah, it has.
Not overly concerned, but I don't like the seasonality for the next month, and sentiment has gotten a little bit ahead of itself in the short term. So you never know what happens in the lead up to the election. So I'd be
Do
ready
you have
for
any?
anything.
Yeah, always. And do you have anything above 6,000 that's going to tell you that things are really frothy, or you just have to wait till we get there to know what the market conditions are? Do you have a technical target to the upside of going into next year or the end of the year?
I don't like to play
Targets?
targets
Okay.
necessarily.
All right.
That 161 extension from the
Yeah.
post 2022 um,
A little over
bear
six.
market was really helpful in the S&P and the Nasdaq
Yeah.
100. In you look at but that was a temporary thing. That was like a profit taking thing. It wasn't uh, uh,
A
jump out of
rotation thing.
stocks, full board. No. But you look at something like SMH, also the semiconductor
Yeah.
ETF right up to that 261, and that was the top. So maybe a signal there.
Yeah.
I use
Interesting.
that more for profit taking areas, not in sell signals, unless our stuff turns negative as well, which it has not yet. But good opportunity to rotate out of some of those former leaders and now look for new leadership.
Yeah, because I mean the S&P compared to the July high has exceeded it by a long
Yep,
shot,
yep.
and Nasdaq hasn't, you know, taken it out yet.
No, so
The leadership is different.
yeah, leadership is definitely different. This one again, right up to that 161, a good spot to take profits. Then when you get the reversal, then you can make some adjustments. But we've had plenty of, and this speaks to the the firmness in our models, the fact that we've had plenty of sectors rotating to take the place of the leadership, the industrials, a lot of the defensive names, which went on a great run. Healthcare, utilities, went to new highs.
Yeah.
Uh,
Okay, so
REITs went
utilities.
to new 52-week highs.
All right,
Uh,
interest rate related stuff. So where are you on
Yeah,
TLT?
and value stuff went
Yeah.
to new highs. So
Okay.
that's in our view, and again, speaking to our models, that's a healthy market when you have a broad array of market segments and sectors hitting new highs.
Yeah.
That puts a bit of a bid or a foundation under the market where you're less susceptible to just a top and an
A
automatic
shock.
reversal lower.
Yeah.
You've got a foundation under the market where it's going to actually take a bunch of cracks, a bunch of a process in order to turn the market lower. So I think we have that foundation, that safety net under the market right now, where I think we go higher eventually, have another move, maybe a blow off move before the ultimate top here.
Okay. 10 year, we broke down from
Then
420, hit the target, and now it's just a rally to sell here, and yields are going to drop again. And is TLT a buy?
that's our view. We've been buying the last few days into this. We
Okay.
think you know the 10-year around that 390 level is our really line in the sand. So right now we're above it. We will buy up into this 415 or so on the 10-year.
Yeah.
We've been buying up to like 440 right at the top in the 30-year. We think there is a chance for another move lower towards
Okay.
3.25 on the
All right.
10, maybe if we can, down
But
towards
if we close over 420, does that change the picture for you? Because that was the breakdown.
uh not necessarily. We'd certainly be less interested in buying it. But you can have overshoots. Trend is still lower as long as we're seeing lower lows, lower highs. Um, so we're still gonna be bullish. Prices bearish on yields, but certainly if we did get higher highs, then we'd have to change our thesis. Right now, we're bullish on bonds still, but certainly pushing the envelope here.
Right.
So
They
ultimately,
have to
price will
dig in their
dictate
heels.
that. But yeah,
How about
um,
natural gas issues?
natural gas. I try to stay away from the widowmaker
Okay. Okay.
for
All right. And
I
anything in
among
energy?
what's that?
Anything in energy?
Yeah, nat gas always looks good until everyone knows it
You
looks
get in.
good, and then
Yeah.
it pulls the rug on you. Crude oil, I think, benefit out still to the downside. I
Yeah.
can't get too bullish on this chart
Okay.
right here. It's GSCI crude oil index. Plenty of resistance to work through, and we've had, you know, no shortage of bullish catalysts to get this thing moving higher to higher highs, and it hasn't happened yet. So I can't get too excited about crude oil here.
How about gold miners? Buy breaks?
Do like gold, the precious metals complex. We still do like quite a bit. We've got decent positions on in gold and silver. Obviously, gold hitting all-time highs. I wouldn't be chasing anything in that, but still buying pullbacks. Silver, I think, is getting set up for another run higher. We've been consolidating here for a couple quarters on SLV, break through 30. We'll be looking for up near 35 next. The miners I like too. Um, Obviously has been lagging the metals themselves a
Yeah.
bit as they have been for years, but like the action there. Junior silver miners, once we
SILV.
get through 13, make a push up towards 15. I think gold miners, have been hitting lower highs longer term, but just recently has had a nice year.
Yeah.
We've been looking for about 46 again, which was, the 2020 high. And
Yeah.
still that 61 retracement from 2011. So at least there, I don't know if we ultimately push through that and have a real rally like gold itself is doing, but still long these positions. I think they have a chance.
Do you think the market will be shaken at all? Since we probably won't know who the president is for a while.
Well, the market's going to do whatever it's going to do to shake out to most people,
Yeah.
That's what the market does. Whenever
Who's
it,
mo who's going to be more vulnerable into that situation? Obviously, the shorts or the longs. And let me ask you, yet someone proposed to me. You remember 2016 limit down S&Ps, right, Dana?
yeah, for
After
sure.
Trump won and Icon left the party and got richer. Um, if Trump wins, and I think that's what the market is hoping for, with tax policies, etc. I don't know. They're ignoring what tariffs could do. Um, could that be put in the high? Because we put in a low in 2016. We were like at 2,000 S&Ps back then.
Right.
So, maybe the market
Kind of a
rallies.
reversal of
Yeah,
yeah, the market. Yeah, you're right. I mean, the market, like I said, the market always does
yeah. So it'll be
whatever
buy the rumors, sell. Yeah,
yeah,
sell
whatever
the.
whatever is going to damage the most people. So
Yeah,
maybe it would be a reversal of,
yeah.
2016, which, was kind of the impetus for
The last.
our new
Yeah.
trading site that I launched in
Oh,
2017,
okay.
because we were hedged going into that. And if I had had a way to get to my subscribers then in the middle of the night, about covering shorts like Carl Icahn was, that would have been a good vehicle. Now we have kind of a vehicle for that
Oh,
because I
interesting.
saw no reason for limit down with the results that were coming in.
Yeah.
And again, not that I knew for sure that would be the low, but I saw the position people were positioned for that, and what the move that
They
was
even
going to
locked.
hurt the most people would be a
Yeah.
reversal and a move higher. So right
Yeah.
now, I think
The
it's
other
kind
way.
of up in the air. I could see a move between now to November, a move to hurt the longs, which is kind of the pain trade right now.
Okay.
We've got a decent net long position on right now. We're not all in because I'm expecting some sort of a shakeout before that. Certainly some surprises come along.
5%. 5%.
Sure. But
Yeah.
for us, again, it goes back to our models, which are still positioned pretty firmly and still tells us there's more upside. So with that, we would use that right now as an opportunity to get more aggressively long. So
Okay.
look for opportunities, look for surprises here to get even in more long, looking for another wave higher. Maybe that comes after the election. Maybe it comes before. I'm not sure, but looking for opportunities to get longer. Here's, I think, speaking to the leadership, we saw that the
Yeah.
growth
Russell.
area of the
It's
market
finally
kind of,
Russell. It's time.
yeah. Well, this is a 3,000 growth,
Yeah. Yeah.
ran up into that 161 extension again at the top in July. You're seeing a
That measures like 3,500.
Yeah, you're seeing here's the
Yeah.
Russell 3000 value though
Yeah.
really coming on, and I
Yeah.
think as relative to growth, I think it's time probably to see value go on a run, which it hasn't since back at the highs and when it topped out
Well,
back in the 2006-7 peak. So it's been a long time coming. Another uh, kind of tell for us is the pure value indices, the small and mid cap pure value indices, which are really good risk on versus risk off tells for us. And the small caps have struggled, but you look at the small cap pure value, which is the biggest risk on tell. It's really consolidated for a year or even 2 years. If we get a breakout in this, you could see a real nice risk on rally before, the ultimate top. So I'd keep an eye on this one. RZV is the ticker symbol.
okay. There's a tell to write down and pay attention to, and don't short till we get there. And Dana, after people see this and hear this, best place for them to follow through with you as an RIA or get your letter. Want to show your website, buddy?
Yes, certainly. So you can find me at the Lion's Share, lionsharepro.com. Mentioned this is the trading site that we started in 2017. Basically, to give you a daily synopsis of what we're looking at as money managers, how we're actually moving our money as money managers for our managed clients. I'll give you trades every day, what we're moving yesterday, added to our 30-year long bond position. But we give you pre-market stuff, what we're looking at, and you pull the triggers yourself, but we tell you what we're actually looking at, what we're actually doing. But our core business is managing money. J Lions Fund Management is our RIA where we manage money. You can find us here, info@JLFMI. You can email me if you got questions. On Twitter, I still call it Twitter. J Lions Fund Management is the handle. So yeah, you can find us here. Check us out. We'll have a crash sale every year in memory of the 87 crash.
Oh, so here we go.
Yeah,
You have
26% off for the
and I
loss of the
want to thank
Dow.
you for also showing my former apartment on the
I
left,
know, Marina Towers, you mentioned that
33rd.
every.
I
Yep.
was back there for 10 days, Dana. I didn't think about it. I would have gotten a hold of you.
Yeah,
I
on
hadn't,
Sunday, you ran the marathon on Sunday?
no, are you kidding me?
Oh, okay.
I ran the marathon on the couch watching the Bears win 2 weekends in a row.
Oh, you got up early
So,
for that one
yeah,
in
and
London.
yeah. Um, and 2 weeks in a row when I was there. It was great to be back.
Yeah,
And you know, I relate to that song by Fogelberg, Illinois. Ever hear it?
probably. I'm not a big
All right.
Fogelberg guy, but
All right. Well, I wanted
I'll look it up.
that's an assignment. All right.
Okay, I'll look it up.
And Dana, thanks so much. Dana, on top of things, you know, I think everyone should diversify away from themselves. Okay, and that's when you look for guys like Dana, especially if you're a trader like me and you think you're just going to make it all, you know, with your short-term trading. That was a mistake I made. Have a long-term plan. Don't expect it all to come out of, you know, swing trading, because you're going to have down years too. And, you know, you also have to apply the wealth management part of your life besides where do I get in, where's my stop, and what's my target. Okay. Um, Check Dana out, and thanks, Dana, for it's good to talk to you. I'll talk to you in our new world probably January. You
Yes,
think we'll
sir.
have
Yeah.
you think we'll have a decision on the presidency by
Yeah, maybe
inauguration day?
the hanging chads again, right?
Oh yeah.
Who
All
knows?
right. Well, always great hanging with you, Dana.
Yeah, always a pleasure, Dale. Thanks for having me on.
All right, buddy.
All
Dana
right, take care.
Lyons, everyone. Check him out on X at J Lyons Management, and you know, give him a piece of your retirement capital to manage. He'll probably do better than you. All right, everyone. You could join the team in 15 minutes on the Morning Edge. And don't just count your pips, count your blessings. See everyone tomorrow. People are thanking you, Dana. And that's a wrap for me. Adios.